It could be that the market is giving us clues as to what we can expect later from the Fed rate hike meeting. We are getting the Fed rate hike meeting today. And if the market's telling us anything, it's telling us that the rate hike may be a favorable rate hike. So we're going to be talking about the rate hike today. I'm going to be talking to you about what's going to happen tomorrow because Janet Yellen has called for an emergency press conference or an unscheduled press conference, which can't be good. That can't be good. So we're going to be talking about that. I'm also going to show you how what's going on now in the market the last couple of days has changed my strategy. And I'm going to show you how my strategy has changed. And then we're probably going to be doing some buying on the show today. So it's going to be a lot. There's a lot happening here today. And I don't really care what Fred thinks. I'm playing the song.
Get the fuck out of bed, bitch, go. Get up, get the guy, go. Time to wake up, bitch, get up. Get up, get up.
I don't care what Fred says. I'm going to carry on playing that song because that song gives us energy. In the bull market, it gives us energy to carry on going higher. And in the bear market, it just gives us the energy to carry on. So let's do this. First of all, I do want to thank all the guys that are here through the good times and the bad times. I do see here B. Carter, Lucifer, The Mad Monk, John Stewart, Kathy G. I see all of you. I see all of you. Charles Z. I see all of you. I see all of you. If you want us to carry on playing this song, do me a favor. Smash that like button. And then if we keep getting the likes, then we'll carry on playing. We'll carry on playing that song. That's what we'll be doing. Anyway, today we got a massive show for you guys. Massive, 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 massive show. First of all, I want to talk about the interest rate hikes and the signals that the market is giving us, because the market's giving us some reasonable signals about today's rate hike decision. So we've got to talk about that because that could be really bullish. That could get us off this trend line. And what you can see here is you can see that Bitcoin is off this trend line, but not only is it off this trend line, it is very quickly moving to try and capture that 21,800 level, this level over here. It's not exactly the most accurate chart in the world, but you see what I'm saying. What it looks like Bitcoin trying to do is it looks like Bitcoin is trying to go back above that line and get us back above that 21,800 level that we were, and then maybe we can continue the little run that we were having. So that's one thing I want to talk about. I do want to show you some signs that we're getting in the NASDAQ about what we may be seeing today and why I'm so bullish about the NASDAQ. Then we're going to be DCAing into a portfolio. So today I'm actually going to show you a portfolio, and we're actually going to be DCAing live. I've done it in such a way that you can get in with any amount of money, and you're not going to be stuck paying high gas fees and high trading fees. So I'm going to show you what I'm going to be doing and what I think you should be doing. I'm also going to give you all the tools. We should probably talk about Coinbase, and we should probably talk about Gary Gensler and how he's going after Coinbase and what the implications of that are. And we'll talk about tomorrow's numbers and the GDP numbers and the expected recession. So it's going to be a big show. We're going to do this pretty fast, but I know you guys like it to happen pretty fast. So let's do this. What I need you guys to do is very simple. All I need you to do is to smash the like button. Tell me if we should keep the song in the beginning. And then later on, when we get to the DCA portfolio, let me know if there's anything that you would change. Okay, let me know if there's anything that you guys would change. Cool, got it? Let's do it. 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 All right, let's look at the market first. So let's go onto the markets first. What you can see, as I said to you guys, you can see Bitcoin is not only staying above this little trend line, which is cool. It's a short-term trend line, but still a small victory. What we are also seeing is that it's slowly, since this morning, starting to climb up back towards that 21,800. If we capture that 21,800, that's a great sign. It could mean that we could go back to the 28,000. We're also seeing something else, which I think is worth talking about. And that is that if we look at the NASDAQ, so the NASDAQ is up 229 points from yesterday's close, 228 points from yesterday's close. And the reason why that is such a big sign for us is we got big earnings yesterday. Remember I said to you, it's a massive earnings week this week. And we had Microsoft, Google, and Visa yesterday. Today we've got Facebook, and tomorrow is actually a very big day because we've got Apple. So we got the Microsoft and the Google earnings, and both Microsoft and Google missed their forecasts. Okay, so we had Microsoft, and Microsoft missed their forecasts. They were supposed to give us an earnings per share of $2.30. They missed their forecast by about 4%, and they brought us earnings of $2.23. Then we also had Google, or Alphabet as they're called today. They were supposed to give us earnings, or the forecast was that they were going to give us earnings of $1.32. What did they come in with? $1.21. So about a 9% miss. So now you've got two of the biggest tech giants, who one of them is very much advertising driven and the other one is very much SaaS driven, and they have both been under forecast. Now, what did the market do? What did the market do when two of these giants actually reported under forecast? Well, what the market did was the market went up. So when that happened, what you can see is that on the hourly, let's actually go to the hourly, it'll just give us a better view. But as soon as they reported, what you all of a sudden got is you got these 3 green hourly candles, which took the NASDAQ up by about 1%. Why? Why did that happen? Well, I guess what the market is telling us is we know that the numbers are going to be a little bit disappointing, and there have been no shocks. So even though we were 8 to 10% under in terms of earnings, the outlook for the future has been pretty good. Microsoft gave a very good future outlook for what they see, and the market wasn't as disappointed. And I think what the market is thinking right now is that the market is so negative that the market actually thought, okay, well, hold on a second. You've only missed by 3 or 4% or by 8%. That's cool. There's no big shocks. We can carry on and it's business as usual. So that's pretty much what the NASDAQ is telling us. The NASDAQ is, if you look at it, telling us that regardless of what happens tonight, we may be seeing a little bit of a run. Now, what is actually going to happen tonight? Well, remember tonight at, I think it's 1:31 EST. So it's at 1 EST, right? 1 or 2 EST. It's 8 o'clock our time. We're going to get the results of the FOMC meeting, which is actually happening right now. And what we're seeing in the FOMC meeting is there's a 74% chance that we're getting a 0.75% interest rate hike. There's a 26.1% chance of we're getting a 1% interest rate hike. That's the first thing. So if we get a 0.75% interest rate hike, pretty much the market gets what they bargained for, and then we can probably imagine that this pump will continue. If we get a 1% interest rate hike, then if we get a 1% interest rate hike, then what we can then say is that the market's going to be pretty shocked. And if the market does get pretty shocked, then we could have the markets coming down quite heavily, and crypto will come down quite heavily. But the market's telling you there's only a 26.1% chance of that happening. So that's what the market's telling us. If we do get a 1% interest rate hike, then I will be live within 15 minutes of the interest rate decision, and we'll listen to the press conference together. So what I want you guys to do is just make a note in your diaries. If you see that the interest rate hike is 1%, that's a surprise. The market should start crashing. I'll be live 15 minutes after the rate hike, and we can watch the Powell press conference together. Remember, the important thing is not what is going to happen, but it's much more what Powell does and what he says afterwards at 2:30 EST in that press conference that is going to happen. And the reason why that's so important is because there is a chart which Gareth Soloway actually identified, and this is the 10-year Treasury yield chart. You see, so that's the chart of the 10-year Treasury yield. Now, he is saying that there is a head and shoulders playing out on that chart. And remember, we want this chart to go down, because the lower this goes down, the lower it says that interest rates are going to be. And he says that there is a chance that tonight, when the Fed speaks, we're going to get this line breaking, and then we can go down to almost 2.1%. So this is it's quite a big day, because we're looking at the 10-year Treasury yield. And if what Powell says in the press conference after the interest rate decision is good, if he's dovish, if he's not too aggressive, and I don't think he's going to be too aggressive, well, then we could get a breakdown of that 10-year Treasury yield head and shoulders, and that could put the market into a real rally. So tonight, what you want to be watching when Powell is speaking, you want to be watching the Bitcoin price, you want to be watching the stock markets, but much more importantly, the chart that you want to be watching is this 10-year Treasury yield, because this chart tells us how aggressive the market thinks that Powell is going to be. And now we know it's going to be a 0.75% rate hike. We think we know. There are some people that are calling for a 1%, a full percentage point rate increase, but I don't think so, and I'll show you why. I got this data from CNN, and the red lines on this data, let me make it a little bit bigger for you guys, but the red lines on this data actually show the last time that the Fed raised by 75 basis points. And you can see that it's very rare for the Fed to raise by 75 basis points. It happened once in June, we know about that, but before that it happened in 1984. In 1994, and before that it happened in the 1980s. That was the last time that the Fed increased by 0.75 basis points. By 0.75. Now, that's the case for a 0.75 basis point. There have been times in the past, very long ago, that the Fed actually has raised by 1%. So there is a 26% chance that we're getting a 1% raise today. And there have been times in the past where the Fed has raised by 1%. So let's look at when that actually happened. So in the 1980s, okay, in September 1980, Volcker, who was the president of the Fed back then, was trying to fight inflation, and he raised interest rates by 100 basis points. So what I went and did was actually went to look at how bad was inflation at that time that made him raise by 1 full percent. And you can see this chart over here. This is the inflation chart, and we're going to go to, say, 1979. And the last time that anybody raised by 1%, which was Paul Volcker, which, by the way, Powell always speaks about, it's always Powell's reference point, is after we had 12 months or even more. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, almost 2 years of inflation above 9%. That is when the Fed went and increased by 1%. So I don't know, to me, it seems highly unlikely, but I mean, look, probabilities are probabilities. And what you can see is that there is a probability. So we have to talk about it as a 26.1% probability. I think that plays out in our favor. The market is telling you that it's playing out in our favor. Bitcoin is climbing. The NASDAQ is 1.74% up. And usually the market knows ahead of the time, and that's what's happening. Regardless, we know the Fed's on a mission. And the mission that the Fed is on is to get inflation down and to slow down the economy. That's all the Fed actually wants. So how are they doing on that scorecard? Well, the first thing is the housing prices have started to come down. Housing prices are down 9.5% in the last month. US credit card debt is at all-time high. Interest rates are rising very, very, very fast. In fact, the fastest rate in history. 60% of Americans are not able to keep up with inflation, and mortgage demand is now at a 22-year low. What's that saying to us? That all this talk by the Fed and all this action by the Fed is actually starting to work. And so I don't think that we get a surprise tonight. But hey, if there is a surprise, we're going to be here right here with you. I'll be live at 2:15 p.m. EST, bringing you commentary and crossing live to the Fed press conference. If it's if we don't get what we if we only get a 75 basis point rate hike, then we all go to this chart and we watch when Powell speaks. This is the chart that you want to be watching, and you want to be following the trend line. And if you see that the US 10-year Treasury break below that neckline, that may be your buy signal. That may be your buy signal. So that's how I would be playing this. That's how I would be playing this. All right, then that's today. Today, I think we've got Meta earnings, so we've got to look out for the Meta earnings, because remember, the Meta earnings could hit the NASDAQ. But I think if Google was good, Meta is going to be good. So, or I don't think the market's going to respond very negatively to the Meta earnings. Then the big week continues, guys. The big week continues. We're getting, we got the FOMC, we got the Apple earnings tomorrow. The Apple earnings tomorrow are huge, but even bigger than that tomorrow is the GDP number. Remember, tomorrow morning at 8 o'clock or 8:30 a.m. EST, the Bureau of Economic Analysis in the States published the GDP numbers. And even though the consensus is that those GDP numbers are going to be positive, if they are negative, even if they are negative by a little bit, the US is officially in a recession, depending on whose definition of a recession you use. And what we're seeing here is we're seeing two signs that should be worrying about this tomorrow. The first sign is, we've spoken about this for the last 2 days, and if you missed our show yesterday about recessions, go back and watch it, because it shows you that a recession is not the worst thing in the world. The other thing that we see here is we see that they warned us. They said, oh, look, even if we get a negative a GDP reading, that's not the end of the world. It just means blah, blah, blah. That's what they said to us. But then something else happened today, and you got to pay attention to these things. What happened today was that Yellen is asking to hold a news conference on July 28th. Quite strange, an unplanned news conference. Okay, why would Yellen, on the same day that the economic numbers are about to get released, and we are expecting a negative GDP number, and that would officially put the US in a recession, why would Yellen on that specific day call a press conference? Probably only to tell us that even though the numbers may come out negative or do come out negative, well, then we're not in a recession. And she's going to try and tell us why we're not in a recession. So I think for me, the market is aware that the numbers tomorrow are going to be negative and that we are in a recession. If that happens, great. Markets continue as usual. Maybe we get a small shock, markets dip a little bit, but then market continue as usual. If by some slim chance we don't get that recession, then rest assured that the markets rally tomorrow. And if the markets rally tomorrow, I think crypto goes with them. So we want to be watching. You want to be watching today and tomorrow. And I think I've showed you exactly what it is that we should be watching. What else? What else is there that we want to talk about? I would say we would be perfectly okay. And I would say that there is a 100% chance of a market rally today. The only thing is that Jim Cramer has said that the Fed actions this week could lead to a market rally. So as confident as I was, and I was confident, I was very confident about this. When I read this tweet, it was like all the air came out of the mouth. Okay, I'm not so confident anymore. Otherwise, I'd be 100% confident. I'd say, you know what? We're going to get a rally this week. It's going to be amazing. But then Jim Cramer went and did this. Crazy. I mean, I don't know. Guys become the biggest counter indicator in the world. The biggest counter indicator. Even worse than Fred. All right, let's talk about what could happen tomorrow. Regardless of what happens tomorrow, regardless of whether we get a recession or not, and we probably will get a recession tomorrow, you got to remember a few things. So you got to remember that recessions may be the biggest opportunities of our life. And I published the thumbnail, and we said no more clickbait thumbnails. Like we, as a station here, we're not going to do any more clickbait thumbnails. But I think that this may be one of the greatest opportunities of our lives. And that's why I insisted that we actually put this tweet here. And the reason why I say that is because if you know what you're doing and you have a strategy in a recession and you follow the smart money, then recessions could be the biggest opportunity of your life. And I want to show you why. So the first thing is we need to look at what the smart money is doing, because what we know is what I tweeted earlier. What I tweeted earlier was I said, I think I've got it here. Let's quickly look here. So I tweeted earlier that real wealth is built during recessions. No one ever builds real wealth in bull markets. What you do in the bear market positions your portfolio so when the markets run, you can reap the rewards of the seeds that you planted. You got to look at it like farming. You got to plant seeds, and then you got to wait for the market conditions to turn. When the market conditions turn, that is when you actually start to make money. Now, I know we all enjoy bull markets much more, but it's the work that you do in the bear market that positions you for the bull market. It's pretty self-explanatory. And I know that the problem is that we want quick returns, but the days of quick returns are gone. And so now you've got to be smarter than your average investor. And so what I believe that you got to follow the smart money. And if I look at what the smart money is doing, this is what you call the smart money confidence. Now, the smart money confidence is an indicator which shows you when is the smart money confident enough to start deploying money into the economy. And it takes a 100-day moving average, so it's quite a lagging indicator, so to speak. And what you're seeing now is that the smart money is now ready to start deploying. And every time that the smart money deploy, within a couple of months, you start getting you start getting a bit of a rise. And that's exactly in keeping with our thesis about recessions. So you could look at a recession like the average retail investor and panic about it and say, oh my goodness, it's so bad, and our portfolios are going to continue to go down. Or you can say, look, we are where we are. And now I've got an opportunity to build a real amazing whale portfolio. I've got an opportunity to do this and ride it properly into the bull market without making the mistakes that you made in the bull market, i.e. trading on hype, trading on momentum, buying shit and trying to hold it at the top and trying to hold it and eventually landing up holding it all the way down. No, Carl's not the smart money, definitely not the smart money. Carl's the conservative money. All right, so today we're going to talk about that portfolio and what that portfolio should look like. And I'm going to show you, I'm actually going to build the portfolio live online with you guys today. But before that, I want to talk about a couple more things. So let's just talk about a couple more things. First thing that is worth talking about is Coinbase. Okay, so let's get Coinbase into perspective. So Coinbase lists in April 14th of April, 2021. That's when Coinbase goes onto the stock market. They go onto the stock market at an IPO price of $380. They spike to this big candle over here, $430. And today you can buy a Coinbase share at $55.50. So where did Coinbase actually go wrong? What's going on here? Well, first of all, Coinbase is a proxy for crypto markets. It is how the traditional investor, the funds, get access into crypto markets. And when they think crypto is going down, well, they're going to dump their Coinbase stock, right? So if you're a traditional investor, you're probably looking at Coinbase and you're going, Coinbase is down 80, 90%, but then again, so is the crypto market down 80, 90%. But then Coinbase has got a whole lot of other problems, okay? So first of all, as file numbers 0001 says, their new metaverse video was so cringe. I wanted to play it, but I'm so scared they're going to give me a copyright strike. That worries me, because when you say their video is shit, then they go and report you to YouTube, then you get a copyright strike. Then I'll share it on my Twitter. All right, but then for one, they have now the SEC interrogating them. And what the SEC is saying, the SEC were very smart here. Why were the SEC so smart? The first thing is they conducted an investigation for insider trading, and they bust a Coinbase employee called Ihsan Wahi, who was leaking inside information to his brother, Nikhil Wahi, and another guy called Samir Ramani. We spoke about that last week. That should come as no surprise to you. So Coinbase has this insider trading cloud that is sitting on their head. What happened here, though, was a little bit different. In order for the SEC to catch these brothers out for insider trading, the first thing they had to do was to deem a whole lot of tokens securities. So the first thing is they said, look, the stuff that you traded was securities, and they listed a whole lot of tokens that are securities. So everyone thought, okay, cool, that's good. SEC is doing their job. Bad. Because what the SEC indirectly did was they deemed those things to be unregistered securities. And then, by virtue of the fact that Coinbase was selling these unregistered securities, the SEC has now come and started to investigate Coinbase for allegedly listing securities. And so what we see now is we see Gary Gensler and the SEC going after Coinbase, because that's the easiest place to go to, because they're based in the United States, they are American, and if it's the one central point that you can go to make a big, if you're Gary Gensler and you wanted to get as much information, you wanted to get as much power as possible, what do? It's very simple. Well, I mean, I would do the same thing if I were him. You go to Coinbase and you start giving them funds and you show everybody that you're actually regulating cryptocurrency, because it's so simple. Just go to Coinbase. You can't go to the issuers of all those protocols, because most of those protocols are actually decentralized. And so more issues for Coinbase. And yesterday when this came out, the Coinbase share went down another 20%. You can actually see it over here. Let's go do we can look at the 4-hour chart. So that's yesterday's 4-hour chart. You can see that Coinbase yesterday, which is, I mean, this is unusual for a stock, went down about 20% top to bottom. Okay, so that was yesterday's, sorry, that's ARK. I'm looking at the wrong thing. I'm wondering why it's not working right. Here we go, much, much, much worse over here. You can see that Coinbase went down day on day, or you can see from top to bottom 30%, but it closed down 20% yesterday. That's what happened to Coinbase yesterday when the SEC announced that they were now investigating Coinbase for listing illegal, unregistered securities. So the SEC is trying to get more territory that they cover, because you know that there's an executive order to regulate crypto, and Gary Gensler is now going after Coinbase, which is a big problem. The good news is, though, that I think that Coinbase will actually trade out of it. And if Coinbase does trade out of it, there is an opportunity for people to actually start buying Coinbase. If you want to buy something that is an equity and that is exposure to crypto, I think Coinbase is actually a pretty good buy. I don't think it's going to close down. You're getting it at a market capitalization of $12 billion, which is quite cheap for what Coinbase is. So if you want to get into that, that's probably a good time to be buying. Someone who sold Coinbase yesterday, or that's some more woes for Coinbase, is that Cathie Wood, who's a massive growth investor, who's the founder of ARK, invested or sold over 1.4 million Coinbase shares. So she said that they sold $1.4 million of Coinbase shares. They didn't say why they bought it. And if you look at where they sold 1.3 in ARK Innovation Traded ETF, which is the famous ETF, then ARK Next Generation ETF. So she lowered her exposure in all of the ETFs that she has. She lowered the exposure to Coinbase. Now, why did she do that? Well, we don't know if she did that because she felt that she had too much exposure to Coinbase, or there is actually another explanation which might be good, and that is that if you look at her holdings, this is the ARK Innovation ETF holdings. If you look at the ARK Innovation ETF holdings, they still own 260, they still own 5 million shares of Coinbase. So it could be just to rebalance, just to keep Coinbase at under 3%. It could be that. Or they're saying, look, hold on, we're not very confident about Coinbase. There's too much regulatory headwinds. We don't know how bad this is going to be and how long this crypto winter is going to be. And then we want to reduce our exposure to Coinbase. So we don't know why she did it, but she did do it. And remember, she bought those Coinbase shares. I think, if I'm not mistaken, she paid $250 for those shares. She paid $254.65 for those shares. She sold them at all-time lows of $53. I mean, that also, if you look at the rest of our portfolio, this is the ARK Innovation ETF. This is the flagship ARK ETF. And what you can see here in the flagship ARK ETF is that they are down. Let's quickly go here and have a look. 70%, 65% they're down from their highs. So that's how growth has performed, and now she's dumping Coinbase. Anyway, so that's the Coinbase. That's the Coinbase story. The saga continues. Remember, you want to buy when others are fearful, and now everyone's fearful. Everyone's FUDing Coinbase. Coinbase is at peak FUD. To me, if I had a stock portfolio, and I'd probably have to add Coinbase now. It just feels right to be adding Coinbase now. Alrighty, so that's that. Now let's get into the meat and potatoes of the show, because that's actually why you guys came in. I want to show you guys what I'm doing and how my strategy is changing. And my strategy actually isn't changing, but I wanted to show you guys the strategy that I'm implementing in this bear market, in this correction. I'll show you what I'm doing now. So we don't know for sure, but we think we're going to enter a recession tomorrow. The good news is that we know recessions can last between 4 and 12 months. We know that. That's as per the numbers that I showed you guys yesterday. So the smart money knows that recessions last between 4 to 12 months. And what the smart money also knows is that the markets recover quicker than the, let me have a look here. Let's see if I can find you guys a chart. I think I've got a chart. Hold on a second. Give me one second. I'm going to find this chart for you because there's a really good chart that I want to show you guys. Let's see. Is it this one? It's not this one. Hold on. I have to find this chart for you. It will take a second for me to do that. There we go. I got the chart for you guys. So what we know is we know that recessions are between 4 and 12 months long. We also know that markets recover before the end of the recession. And the last thing that we know is that after every single recession, I've only taken the last 5 recessions and put them down for you. Here's the first recession. Look what happens to the market. Market explodes afterwards, parabolically almost. Here's the second recession. we get to the bottom and market explodes parabolically. Here it took a bit longer, but this was a dot-com burst, the dot-com bust. In 1990, 1991, we get the recession and we get a very quick recovery. And the same thing in the 1980s, we get a recession. Straight after the recession, the market goes up in pretty much a straight line. So we are getting a recession tomorrow. The recession could be as long as it is, but if anything towards anything other than normal recessions, it's going to last between 4 and 12 months. If it lasts anywhere between 4 and 12 months, you can rest assured that the market will recover before the end of the recession, which means you have limited time from now to be like the smart money. And when I say to be like the smart money is confident now to start deploying, even though we're just going into the recession. Okay, so bang, like you say, recession is the ultimate bottom indicator. So what do we want to do? We want to be like the smart money. What does the smart money do? The smart money realizes that this may be a once-in-a-lifetime opportunity. This may be an opportunity for us to build wealth while others are panicking. We are going to start strategically dollar cost averaging into stuff that we think is going to be amazing and that is very low priced. And we're going to carry on buying those right through the recession. And when this recession finishes, then rest assured that the recession is going to finish. How do I know that? Because recessions always finish. And when recessions finish, we always get an aggressive increase in the markets. That happens every single time. So let's prepare ourselves. How do we prepare ourselves for something like that? So simple. We dollar cost average, and we dollar cost average into good stuff. And the reason why I say we dollar cost average is because even though it doesn't feel like we're making a lot of headway, even if you just purchase $10 a week or $10 a month, okay, so if you were buying $10 worth of Bitcoin every week for 3 years, you would have turned $1,570 into $437. Okay, so into $4,037. Okay, so what we see is that it is worth accumulating via dollar cost average. And this number is taken in the market low. Okay, so this number is taken in the market low, not in the high of the market. So if in the market low, you invested $1,570, which is $10 a week, and you got 157% rise in return on your portfolio, and that is now equal to 3 times what you invested at the low, there must be something here. And so that's the strategy. The strategy is that what we're going to do is we're going to buy once a month, once a week, whenever you can buy, and you want to be dollar cost averaging. We said that a million times. It's something that all YouTubers preach, or responsible YouTubers preach. But, what? The question is, what do you dollar cost average into? You got to be super smart about what you dollar cost average into. You got to dollar cost average into things that are cheap, that you think will explode, that are fundamentally strong, not just strong, but fundamentally strong, and that will survive a bear market. That's what you got to do. And so that is how you get wife renting money. Wife renting money. All right, so what have I done? As usual, I've prepared a Google Doc. You guys will all get the Google Doc. The Google Doc is made up of our investment thesis. Our investment thesis says 50% into the HODL portfolio, 35% into the gems, 15% into the high risk. Okay, so that's what it's going to look like. But then I've taken it a step further. And I've said, look, I don't want you guys paying gas fees. So what we're going to do is we're going to do some of it on ByBit and some of it on KuCoin. Because those two are partner exchanges. You've got referral links in the bottom. The referral links give you the best sign-up bonuses, I think, in the world. You're getting $4,200 on ByBit plus a chance to 10x your portfolio. On KuCoin, you're getting it. For our US viewers, you can use KuCoin and you can use BitGet. That's why we got BitGet for you guys, because they have a good selection of coins. So everybody can participate. US, non-US, everybody can participate. No one is going to pay gas fees. No one is going to pay gas fees. And we're going to build a portfolio together. And then what I'm going to do is I'm going to buy the portfolio. And what you're going to see is that I'm going to be able to keep track of my purchases here just using CoinStats, which is, again, there's a referral link in the bottom. You can see that what I've done is I've got two exchange accounts linked to my CoinStats. And together, I've got $2,500 in those accounts. What I'm going to do today is I only want to deploy $2,000. What I'm going to do today is I'm going to deploy $2,000, and I'm going to deploy $1,000 before the FOMC meeting, and then tomorrow after the market has either exploded or not exploded after the FOMC meeting and after GDP numbers, I'm going to deploy another 1,000. So I'm not going to deploy everything at once. That's one of the big lessons. One of the big lessons is if you're dollar cost averaging, you're worried about what's going to happen today with the interest rate decision and tomorrow with the GDP numbers, then just don't deploy everything today. Dollar cost average. And then once a month, together, we're going to dollar cost average. I'm going to put probably, say, $300 a month into this portfolio, and we're going to watch the portfolio grow together. All right, so that's what we're going to do. All right, so if you like this, smash the like button. Let me know you like it, and let's get into the show and see what we're going to be buying. Remember, the first thing that we want to be buying is we want to be buying 50% of our tokens in the HODL portfolio. You want to make sure that these are tokens that you really believe, and you probably will never sell them. You'll only ever buy in this portfolio. You're not going to sell anything in the HODL portfolio, right? So let's just quickly, goodness. Using Google Sheets, love Google Sheets. Like I love Microsoft Teams. Okay, so what am I going to do? I'm going to buy myself 20% of my portfolio is going to sit in Bitcoin. 15% of my portfolio is going to sit in Ethereum. 15% of my portfolio is going to sit into Solana. The total amount that I want to invest is $2,000. And so I want to deploy $1,000 today and $1,000 after the FOMC meeting. And so that's what my HODL portfolio is going to look like. So I need to buy $200 of Bitcoin, $200 of Ethereum, and $150 worth of Solana. So what I do, I go to ByBit. As you can see, I'm going into the spot trading section on ByBit. And the first one is I'm going to go look at Bitcoin, and I'm going to buy $150 worth of Bitcoin. So I'm going to pick a price because I don't really actually care, right? What was it? $150 worth of Bitcoin. It was $200 worth of Bitcoin. So here I am on ByBit. I'm going to go in with $200. I'm going to go in at the current price. Oh, I nearly bought $2,000. Bang! I have my Bitcoin. Cool. The next purchase that I'm going to do is I'm going to buy $150 of Ethereum and $150 of Solana. Again, I'm doing it on ByBit. I'm going to spot trading. I'm going to ETH. I am buying $150 worth of Solana, worth of Ethereum. I'm buying it at the current price. I don't really care about price because I'm dollar cost averaging. So an extra $1 or $2 is not going to make a difference. Buy the ETH, and I'm going to buy the Solana. So let me just find Solana. Spot trading. Actually, let's just quickly go search for it here. I think it's easier. Solana. So we want the spot. And I want to buy $150 worth of Solana. $150 worth of Solana. And I'm buying it at, let's just put it in 37.20. Bang. I've got the first part of my portfolio done. There we go, done. All right, let's carry on. So that's the first part of my portfolio. And again, I'm only putting in $1,000, and afterwards I'm putting in the rest. All right, so what else is in my portfolio? The next part of my portfolio, 35%, but in this case, I've actually put 40% into it, is for the long-term gems. It's stuff that already has network effect. I'm going to hold it for a while. I don't plan on selling it. It's all really, really, really good stuff. Let's talk about what I'm actually putting into this portfolio today. So into this portfolio, I am going to Microsoft Teams and Google Sheets. You belong in the same place. All right, so let's look at what we're buying. We're buying Matic. The reason I'm buying Matic, as you know, it's got a whole lot of traction recently. It is the layer 2 over the most prominent layer 1. And I think that Matic is right now one of the best ones to be buying. So I'm putting 5% of my portfolio into Matic, 5% into either Cardano or NEAR. You make your call. You decide. I've given you guys options. For those of you who believe in Charles, go with Cardano. For those of you who believe in NEAR and all the venture capital money that they raised, you guys go and buy NEAR protocol. Either way, put 5% of your portfolio into each one of those. All right. Then I'm putting 5% of my portfolio into Arweave. That's only available on KuCoin. Then you got a choice. And I'm quite torn here because on the one hand, I'm looking at either Uniswap or DYDX. So in fact, hold on, I think I added them both in. I removed it and I added both of them in. So then I'm adding Uniswap to my portfolio. And I'll show you why I'm adding Uniswap to the portfolio. So the first thing that you can see about Uniswap is this. You can see that the biggest addresses are accumulating Uniswap aggressively. So you can see addresses holding 10,000 to 1 million Uniswap are accumulating Uniswap aggressively. So that's pretty much a good thing. We also know that from a volume point of view, Uniswap is now doing what 50% of the equal ratio to Coinbase's volume. So for me, Uniswap is another one that I'm going to be adding to my portfolio. We didn't speak about ETH, but you got to hold your ETH in anticipation of the merge because this merge is pretty interesting. You hold your ETH in anticipation of the merge. We think that ETH is going to explode just before the merge in anticipation of the merge. And then it's going to get pretty interesting because there is a chance that the proof of work miners actually won't switch off the proof of work chain. And you're going to get two parallel chains. You're going to get one ETH proof of stake chain, which is the one that's migrated to ETH proof of stake. But we could get a continuation of the proof of work chain. And if we do, we've got two parallel chains, one with proof of work, which is slow with high security, and one with proof of stake, which is arguably maybe less secure, but much faster. So that could happen. What we also saw yesterday was we saw an announcement by Antpool. Antpool is one of the biggest miners. Now remember, the miners are going to lose a whole lot of revenue when Ethereum merges, when Ethereum does the proof of stake merge. And so they are now funding Ethereum Classic. Why? Because Ethereum Classic is actually just a fork of Ethereum. That's what it is. And what they're saying is, hold on, what are we going to do with all our mining equipment? Well, maybe we should fund a proof of work smart contract blockchain. There aren't any other proof of work smart contract blockchains. And there are people that want proof of work smart contract blockchains because they're higher security. Even though they're slower, they're much higher security. All right, so then I'm going to go and buy that. I'm going to buy FTT because I want exposure to exchange tokens. I'm going to buy ThorChain. The reason why I'm buying ThorChain is because one of the narratives that I really believe in is cross-chain protocols. I really believe in cross-chain protocols. I really believe that we need to solve the cross-chain problem because we're going to be in a multi-chain, cross-chain world. Then I'm going to go and buy Curve. The reason why I'm buying Curve is because it is one of the most utilized exchanges, and they've recently launched their own stablecoin. And as I said before, I'm going to be buying DYDX because, again, they're getting huge volume on the exchange. Now, you can see that I can buy these all on ByBit and KuCoin. So I've got my ByBit account over here. I need to buy $50 worth of Matic. I'm not going to do the whole portfolio here, but I think you get the point of it. You can really do this with any amount of money that you want. So even if you only got $1,000 or $100, you can do it. You're not paying any exchange fees. There we go. I'm going to quickly just increase the price of Matic because I want to buy it. Bang. I bought the Matic. And I have Matic in my portfolio. Done this all, building the portfolio. And I'm going to show you in a second how I'm going to manage it. All right, then let's go to the DGen picks. Now, the DGen picks aren't very DGen. They're much less DGen. Why? Because we're going into a bear market. And in a bear market, you don't know how long this bear market's going to last. And if you don't know how long the bear market's going to last, rather let's play it safe until the market starts giving us good signs. The last thing you want is to be degening into smaller tokens, and then the bear market lasts longer than we expect, and you get these projects don't survive. That's the problem. So what am I going to do here? I've picked some DGen plays, but they're not very, very, very DGen. Okay, so I picked DOT. I'm going to put 2% in my portfolio into DOT, 2% into Ape because I want metaverse exposure, and I think that's a good one, 2% into Render, 2% into Stargate because that's my pick for cross-chain, which is a high risk but doesn't have the volume yet, and 2% into GMX, which is pretty much an options DEX, if you want to call it that. So that's what the portfolio looks like. Now, you'll notice that I've done it in such a way that you can buy all of these things on either ByBit or KuCoin or BitGet. If you're in the US, you can buy them using BitGet. There are referral links for all of those before. We're going to be dollar cost averaging. I'm going to be putting in $1,000 today before the FOMC. I'm going to be putting in $1,000 after the FOMC, just in case. I don't know what's going to happen after the FOMC. I don't know what's going to happen with the recession tomorrow. I don't know how the markets are going to respond. I don't really care. And that's what I'm going to do a bit now, a bit afterwards, and then once a month. People are saying, rest in peace, Phantom. I just think there's better places to put your money than Phantom. I have got a lot of Phantom. I'm holding Phantom in my portfolio, but I've slowly been getting out of Phantom and putting my money into other things that have much more funding behind them. behind them. I've got a problem with Phantom, that Phantom doesn't have a lot of VC backing behind it. And that, for me, just makes me feel like with Andre gone, yeah. Someone's asking, what about Cosmos? I'm not buying Cosmos. And the reason why I'm not buying Cosmos is because Cosmos is a software, and the Atom token doesn't give you the value capture of the software. So not going to happen. Someone's saying Moonbeam will explode. If you think Moonbeam will explode, put your money into DOT. Or instead of putting money into DOT, put your money into Moonbeam. So you can say /GLMR, which is Moonbeam. Yeah. Why not Coty? Again, you can have 100 coins here. I just think that they're better tokens than Coty. Coty's amazing. Coty's doing incredible things. But for me, there's just a couple of safer options. Yeah, XRP I'm not even going to talk about. All right, what else? So that's the DCA portfolio. Now remember, what I'm going to be doing is I'm going to be managing the DCA portfolio on CoinStats. And why do I use CoinStats? Because I can link my MetaMask wallet and all my exchanges. So every morning when I wake up, I can actually see all the different tokens that I'm holding on all the different exchanges. It will update in a couple of seconds, and then you can see it. I just got to reconnect it and it will update. But this will then hold all the tokens that I'm holding in one place. So if you've got multiple exchange accounts, or you're using exchange accounts, you're dollar cost averaging, and you want to dollar cost average with exchange accounts and with MetaMask and ByBit and KuCoin, and you want to keep it all in one place, well, then just use CoinStats. That's the one that I use, and I keep all my portfolios in one place, and it just makes it a whole lot easier. So that's what I need. What you need a ByBit account, a BitGet account. You need CoinStats, dollar cost average with us. I'm going to finish the dollar cost averaging after the show today, so that we're all on the same starting point, and then what we'll do as time goes by, we'll keep adding tokens. So next month, instead of maybe buying DOT, we might actually say, you know what, let's go buy Algorand, let's go do something else, let's go buy something else. And together, what we'll do is we'll actually build this portfolio together. We know our starting date. We know we're going to make one purchase a month. We can pick a day on every month that we make the purchase. Our initial purchase I'm going to break up into two, one before FOMC, one after FOMC. And for the rest of the recession, we're going to be dollar cost averaging. Even if we're dollar cost averaging with $100, $500, whatever your number is, we're going to build the portfolio together. And at the end of this recession, we're going to sit back and we're going to just we're going to ride the wave. We're just going to be like the smart money, and we're going to ride the wave. And then you're going to realize that actually, when I said earlier that this is a greatest opportunity of our lifetimes, there's nowhere else that I'd rather be than in crypto. And this portfolio and this opportunity has given us an opportunity to build an unbelievable portfolio, which we're going to be doing. Let's do it on the 14th of every month. Americans can use ByBit if they have a NordVPN. If they don't, use BitGet or KuCoin. That's why we got these sponsors for you. Every time we have a sponsor, you can rest assured of a few things. You can rest assured that we use the sponsor ourselves. You can rest assured that there's a good reason that we've vetted them and that we sponsor them. We get about 1,000 sponsorship requests here, and we've selected 5 or 6 sponsors for you guys. So that'll show you that. But DCA with us, we don't take profits with this portfolio because we're building our wealth. We're building a stash while the markets are cheap. And we're going to let it ride, okay? So every full moon, we're going to do it, okay? Every full moon, we're going to buy it. Kyle,
they're on the day moon, so you buy it.
Every full moon. Kyle, you pick the day. Kyle will help us time the market. All right, let's quickly look at what else is happening. Big announcement. Hold on a second. Big announcement. So I asked you guys whether we should move the show 1 hour earlier to start at 9:15 EST daily. You guys said yes. So from tomorrow, we start at 9:15 EST. We move 1 hour earlier. We start at 9:15 and we capture the market open in the United States live on the show. We will also be the first show, I believe, to bring you the GDP numbers tomorrow. So tomorrow we start the show at 9:15 EST, not 10:15 EST. Also, I think worth mentioning, our amazing sponsors, Unstoppable Domains. Now, we made Unstoppable Domains. You guys and me, we made Unstoppable Domains famous here on Crypto Banter. Unstoppable Domains allow you to buy domain names as NFTs with like .bitcoin, .crypto. So if you want to have an NFT domain where you can host your website, but more importantly, you can receive payments, then you go and buy it from Unstoppable Domains. Anyway, they have raised money. They've raised $65 million on a valuation of $1 billion, which is unbelievable. In fact, I'm going to speak to them about running a special to celebrate this so we can have some Unstoppable Domains. What else? Wuhan, another lockdown. I really thought that I'd never want to hear the word Wuhan ever again, but unfortunately I heard the word Wuhan again, and it's because, again, they are locking down again. Who cares? All right. All right, guys, listen, super excited about DCAing with you guys, using this recession or this downturn to actually position our portfolios to be whales. We're going to do it together. We're going to build this portfolio together. Take this portfolio and DCA. If you don't have an account in ByBit, use the referral link below, open an account, open one in QuickCoin, use CoinStats. Together, we will build this thing together. Cool? I'm being told I should do a ByBit giveaway. Should we do a ByBit giveaway? Cool, let's do a ByBit giveaway, quickly. One quick giveaway. Let's 10x someone on ByBit's portfolio. Okay, but why is this thing not updated? Okay, here we go. Okay, so I'm going to pick one account, and we're going to take that account, and we're going to 10x that account number. The account number that I'm picking is 28,717. Remember, all you need to do is open a ByBit account using our referral link, and then put money in the account. And if your account has got money, I'm going to 10x the money. So 28,717. 28,717. We're going to go back to 28,717. Was it 28,717 or 117? It was 28,717. This guy has no money in his account. 10x for no money in his account. Crazy. Anyway, we'll do it again tomorrow. Put money into your account so I can 10x your account. Otherwise, how can I 10x your account? If there's nothing in your account, I can't 10x your account. Carl, bullish or bearish? The minute that Powell delivers today, bullish or bearish?
That's a big on the spot question. I said bullish into the meeting and then tomorrow nuke.
Nuke tomorrow and bullish into the meeting.
So
okay.
Bullish up to 22, 23K.
All right. Bitcoin's telling you otherwise, and I really hope Bitcoin. I think Bitcoin goes above that trend line today. Let's meet again tomorrow. See what happens.
Well, it needs to close above there. That's more important.
It's going to close above there. All right. Let's see. See you guys again tomorrow. Oh, hold on. Whoa, not tomorrow. If we get a 0.75 interest rate hike, then just watch that. You know what I'm talking about. The 10-year Treasury yield chart, and see that it doesn't break out of that head and shoulders that Gareth identified. I'll show it to you guys again one last time. There it is. If not, I'll see you guys again tomorrow at 10 a.m. EST. 9 a.m. EST, 9:15, guys, not 9 a.m., 9:15. See you guys again tomorrow. Until then, have fun, trade well, and remember, open your accounts and let's build this portfolio together. Let's do it.